Hi, good evening. Today is Friday, May 21st. S&P 500 closed roughly unchanged today from yesterday. And for the whole week, we're only down a few points. And this whole week had a much narrower trading range, and we pretty much traded within the range of the week before. We had the anticipated reversal rally yesterday, but the level 4180 on ES futures, which is slightly high here, has failed to break out again today. And we sold off to the infamous Soja level, 4150 on ES again. And that level has been visited a few times in the last 2 days as a bit of a magnet. So with the picture, for me at least, is still very unclear for the week, for the next week, because we're still in that consolidation range. If it's going to break up or break down, I don't know, but I'm gonna trade it accordingly, depending on which direction we move next week. We had some reports today. Housing report disappointed. PMI report had some super high inflation. Inflation registered for both goods and services at the record levels, and which is again ironically is happening as some of the commodities are slightly selling off.
Mm-hmm. In corn, for example, soybeans, bit of a sell-off. Soybean oil, which was very bullish, and but then gold was actually more or less flat, down a little bit maybe.
Right, gold had a very good couple of weeks.
Mm-hmm. And then silver also down a little bit today, about 2%. But then crude oil, this is the Brent crude, yeah. The
Right.
crude was down pretty sharply today.
Right. So perhaps the inflation reading will cool off in the next few months if the sell-off in commodities continues, which is a big if.
The one I would say that was interesting to see rally, which it had pulled back really sharply over the previous week, and then it seemed to bottom out and then rally again, lock limit up, like what we were seeing for day after day several weeks ago, and now it's in lumber. So that's it was interesting to see that sort of bounce here and move up. I don't know if that will continue, but it was interesting to see that bounce and sort of move opposite a lot of the other commodities today.
It's interesting how we have a shortage of lumber, but we don't have a shortage of trees. We keep planting them.
Well, the old saying, back when, I mean, there are lumber companies that you can invest in, but there used to be like pure play timber companies that were just the land, like REITs, and they would simply let the trees grow to the point where they got the price that they wanted, and so that was the thing, that you could let, if you didn't like the price, and you just leave it, it's not going to go bad, unlike corn or soybeans where you have to sell it at a market price, right?
And also, if we look at ARKK ETF, it seems like it's kind of bottoming out. It's been a lot in the news lately, and Kathy would come out and said that she's buying Tesla and she's buying Coin, which is CoinDesk IPO on this pullback, and she thinks that all of these are going to triple, well, quadruple, she said, I can't remember, but increase in value a lot in the next couple of years. So she keeps buying this Coin IPO, but it keeps selling off.
Yeah, it's
definitely due for a bounce at some point.
Well, it's off its low of Wednesday, which is interesting to see. It did bounce a bit, and like Tesla, it seems to have followed the sort of the ARK the pattern of ARK a little better. So you look at that pattern, Tesla seems to have be making this kind of bottom, maybe. And then what I've also noticed is some of that fund's other holdings like GILD, Atamera. These are some that I like to watch. They seem to have made a similar pattern, but of course, Coinbase, it's following Bitcoin, it's following crypto right now. And so we had the big sell-off on Wednesday, a little bounce yesterday, and then more sell-off today in the afternoon.
The news came out again that China reiterates call for crackdown on Bitcoin mining and trading. So like we were saying, the original news was suspect. So now they're sending a second batch of news that is not necessarily.
But that was actually that was then shown to be not true later in the day today. So it's like as one of the things that is very common in crypto is for these like releases that come through anonymous sources or whatever, and they float news stories to create either panic or euphoria, and there's not the regulatory oversight that there is in other asset classes. So nobody's going to crack down on this, and whereas if someone's floating those stories like on a social media or something, the SEC will actually track down, they'll subpoena that site for the whoever posted that. They'll find out and they'll drag them into court or
exactly. And I've actually heard stories of big crypto holders, whales as we call them, actually having open communication on, not open, but on private channels. They have communications on when to buy and when to sell and how to squeeze people in or out of their shorts and or longs. And they're doing it, like you said, because there is no really regulation against that sort of manipulation.
Right.
But like Michael Saylor said, that crackdown on miners in China would actually be good for Bitcoin because it would reduce the carbon footprint of Bitcoin mining and reduce the dependence on China. And so they will start mining Bitcoin in US more based on wind and solar. So every news could be looked at both ways, I guess.
Right. Yeah. But it did come out. It did come out that China is not that there were some people that actually went to the source of the news about China's crackdown on Bitcoin, and it was where it originated was in the 51st meeting of the State Council for Financial Stability and Development Committee, presided by the Vice Premier, so a governmental official, but it has more to do with Xi's commitment to carbon neutrality before 2000. So it's this sort of ESG concern, same thing that Elon Musk raised.
Right.
So it's but the point is there's been no crackdown on miners. There's been no crackdown on trading. They're like trying to what's the term in their Chinese way, nudge the market where they want it to go, which is that just as in the United States, almost all crypto mining is actually with renewable energy like hydro, and that if China goes that direction and they're not consuming power from coal plants or whatever, but from solar, and what's the concern? It's it's so if so that's where it's coming from, I think.
Right. But back to coin, I think it's a good proxy if anybody wants to trade Bitcoin but doesn't want to bother with the whole crypto stuff. I think coin is not a bad proxy for Bitcoin. And if Bitcoin recovers, then I would expect coin as well.
Yeah, it's a good most of the not that the analysts know what they're doing, but most of the analysts price targets are quite a bit higher. They're above 300 on this one. It's pulled back a lot just because of the sell-off, but they actually get most of their revenue from transaction volume, which transaction volume is through the roof right now. So not from they hold Bitcoin, they hold Ethereum, they've got positions, but it's most of their revenue comes from transactions and from investment banking in the space, which that's not slowing down. So these it's actually a good time to buy it. It's maybe in my view, like one of the analogies that I have, the Coinbase is something like CBOE. They profit from volatility because they trade options more when there's volatility, and so but when it sells off, it's actually a great time to buy because you're profiting from the volatility. So it's performed very pretty well over the years. It crashed along with everything else, but it's done very well over the last year. But I see Coinbase as sort of an analogy to that, but for the crypto space.
Yeah. And it's not only China that was trying to affect the price of Bitcoin. US Treasury also calls for stricter cryptocurrency compliance with IRS. And it says that the cryptocurrency pose tax evasion risk, and also calls for all crypto transfers over $10,000 to be reported to IRS. But that's also not necessarily fully correct, because if anybody filled up their tax returns or at least looked at them for the year 2020, which I just did a few days ago in the last minute, you could see that there was a checkbox. Have you traded any crypto in 2020? So you already are supposed to be reporting this on your tax returns for last year. So this is also not news. There's nothing new about reporting profits from trading crypto.
Yeah, and I would say, I've been trading it since 2014, and I reported it every year because it's sort of like, is there a checkbox for did you buy or sell gold coins or something, which is considered in the same category as property by the IRS, at least until they come out with something else. But so there's no checkbox for gold coins or something, but I wouldn't do a trade without reporting it. And then there's a lot of, if you've had it for a while, then it didn't take a big investment for it to become fairly significant amount of money. And how would you think that you don't have to pay taxes on it? It's been I would say that there are a significant number of people who were very early, who they didn't pay taxes on it, and there might have to be some kind of amnesty or something like that on it, because they would be in years of tax. I mean, the time would have passed long ago for the I don't know. I think there's no time limit if you've actually committed fraud, right?
Right.
But it's 3 years if you didn't do something intentional, whatever. But in a way, it's like although there are people that say that the federal government's going to clamp down on cryptocurrency, they're going to ban it or do something like this. Well, why are they trying to? Why are they specifying these, kind of tax
Right.
niceties if they're going to do that? No, they just want people to.
Right. Yeah, like I was saying, unless US government would see Bitcoin as a threat to US dollar, they're not going to ban it. They're just going to milk it for the tax revenue.
Exactly.
So, and they don't see it as a threat right now because it's frankly not really widely used at all as far as purchases and real transactions. Most of the transactions in Bitcoin are just buying and selling in between parties. I wonder, have you seen any statistics? What actual percentage of transactions is for actual buying Teslas or some coffee or whatever? If I were to guess, it's probably less than 5%, maybe even less than 2% of all transactions.
Yeah, I don't know. Like something like Tesla, where there's some things that people do use it for, and like, for example, anything that if you want to buy, let's say something overseas, and I'm talking about perfectly legal stuff, like you want to, I don't know, buy just, there's some rare coin or something like that, or a playing card or something that you and you want to buy it overseas. Well, how do you send that money? Your bank might throw up some kind of barrier to you to being able to do it easily. It might cost a lot of money. You have to talk with 20 people to do it, but you could send Bitcoin instantly. And
Right, but how many people are doing that? That's what I mean. I'm not saying there's definite value in that Bitcoin, but I'm just saying for most people who you know and who do crypto, even yourself, I'm sure you do more crypto trading than more crypto buying as far as the number of transactions goes.
okay, so most of my transactions are some of them trading, yeah, but most of mine are in what I would call decentralized finance. So it would be that you're doing something with your crypto. So there's different things. You can basically lend it out for some kind of return. You can put it into a liquidity pool. So you're being a market maker. You can put it in a kind of decentralized hedge fund where they're doing different strategies with it, maybe trading, maybe something else. And so these things are they're kind of crypto in the crypto world still, but they're more than just holding it and speculating on its price going up or trading it. And you may be able to be a passive investor without you can be a passive investor without having to be doing, unless you're leveraged up. I mean, that's the killer in crypto, when something can move.
Yeah,
Like,
let's put up the Bitcoin chart and
yeah,
look at that.
let's look at that. When something like
The
Bitcoin,
volatility in the last 3 days was insane.
so when you see something like Bitcoin 50% off its high, pretty much, or more than 50% off its high, from 65,000
Right.
down to below, like right at 30. And right now it's at 36,400 roughly. And Ethereum was also off more than 50% of its high. It touched 1900 after having been in the 4350
44.
range, something like that.
Mm.
And so a good 55-60% on both of them. So if you're using leverage at all, I mean, you'd be killed. And
Well, it's also the kind of maybe just proves a little bit the notion that crypto is a store of value, because you want your store of value to be a little more consistent. I think it's an investment vehicle, but as far as the store of value, losing 50% in as far as Ethereum, and 50% in what, a week?
well, okay, so first I would say that Ethereum is not trying to be Bitcoin, and it's more of a you can think of it as it's uh, a, a voucher to use a
Right.
decentralized financial system and network. Whereas Bitcoin, I think, is trying to be a store of value, and that's its function. And now, well, why would it? Well, why would it crash, or how can it be a store of value? Well, I would say there's a lot of people who don't want this to succeed, number one, and that's part of the reason. And I'm not being conspiratorial. I'm just saying that where there is a I mean, there's obvious interest that some people have in not succeeding in any way, and so they'll they'll build up positions and create solves, or they will if you look at, like, when the FBI and the CIA, then they write papers, or the consulting groups that work with them, and they write papers about, well, how to manage these conspiracy theories that are out there, that are floating about this or that. And they, what is often suggested in those papers is that, oh, you go to the, agents should go to the site and post things that don't make any sense, nonsense information that discredits the site as a source of useful information. And so I actually think that the same people that don't want Bitcoin to succeed, they also will ramp up things like Dogecoin and so on in order to discredit the entire idea of cryptocurrency. And I'm not, it's just there is that interest, and it's not like it's a conspiracy. It seems pretty obvious to me that that's what, that you see that happen sort of out of the blue. And but I think that that's part of it. I'm not saying that's all of it. It's a part of it.
But the second part, like you were saying before, if you don't take the risk, your returns are adjusted based on your risk. And crypto had an outside returns. If you look at the year to date, it was insane returns. So it's only natural that there is some risk associated with it.
Absolutely. So it had that's the only way that you're going to get this type of return, where something like Ethereum is still up 20x from its low of March 2020. So 2,000% return in a year. It comes with some risk, and there's just no way to achieve it. I would say that by the time all the uncertainties and some of the open questions that lead people to be bearish on something like Ethereum or Bitcoin, or any of the others, the legitimate ones, by the time those things are ironed out, this is going to be a much more stable asset, because there will be a known value, and people will be hedging, some 3 or 4% move in it, and it'll be a little bit more like a traditional asset at that point. Especially when what we'll see is as like ETFs, and this is made available to retail investors, that they don't have to open a Coinbase account, they don't have to do something special, and they can just invest through their brokerage account, or Robinhood or whatever. More, and they can already do that, but just a regular brokerage account.
Right.
And you'll see this, it'll flatten out, and there just won't be the same opportunity for returns. It'll be more of a, more like a stock, and behave more like a stock.
Right. And with all of the criticism of crypto and Bitcoin and other crypto in general, I would say the technology withstood that recent correction pretty well. Sure, there were some outages in a few brokerages, but they were insignificant, I would say, compared to the magnitude of the correction. I mean, if the stock market had such a correction over 50% in a week, it would have been a lot worse. And I would think that for the technology side of crypto and Ethereum and others, I would say it's a victory.
So yes, there were a few outages at some of the big exchanges, but both the exchanges as well as some of the decentralized finance platforms, they held up really well. And
considering the volatility that we had, I would say it's a huge success for them.
And the thing about crypto, unlike say if this were the stock market and it moved that much in one day, then there'd be circuit breakers hit, they close the exchange,
right?
You wouldn't be able to trade anything until the next day. They let the market cool off, so to speak. But there's no
ban short selling or ban this.
Right. There's no circuit breaker. There's no market closing. Nobody goes home at the end of the day. It just keeps trading. And so that's, it actually is a more efficient market in that sense. And but it's more efficient. It's not necessarily more, easier to handle the volatility or anything. But one of the things that I would say, as we were discussing a while ago, I think that one of the things I was looking at with Bitcoin is this 200-day moving average, and I've been watching it. And when we had this big move down, and this support line was important. There were some people calling this head and shoulders top. I don't think was classically a head and shoulder, and it actually moved even more than we'd expect from that on a percentage basis. But nonetheless, once we broke that support line, I was looking at that 200-day moving average. I thought it might take a little bit longer to get there, but it got there in a hurry, reached through it, and now it's below it. But I don't see that as being fatal. I think it's definitely a little bit more bearish or neutral. But I think that what would maybe make the bear case or bull case look a little bit better is for it to make it back above 200-day moving average here, for it to get back above. There's some minor resistance here that it's not been able to breach through the last few days if it breaks above that. But then the next question will be this support line. Now, one of the things that and so that's Bitcoin, which is I think it's still the lead, it's the engine of the train, and Ethereum's number 2.
Right, and both are trading, like you were saying the other day, both are trading within that large candle that sell off, because we needed to kind of trade within to repair the pricing, to see where the actual buyers and sellers are. So it's probably going to still continue doing this for next couple of days or even a week, or it needs to do some work to repair the damage.
Yeah, and I think, so some of the things that I look at, and there are ways to look at what's called on-chain data. So this is looking at actual transaction data that's happening on the blockchain. And so this is not just exchange data, it's data that's telling you like what's actually moving around from one person to another, one wallet to another. And so this is similar to like OCC report, OIC report, or like a commitment of traders type report in commodities, where you can see the sizes of the positions change of different stakeholders in the market. And one of the ones that's interesting to look at, I think, we'll go to Bitcoin first, is the net unrealized profit and loss. So this shows what's the sort of net position that traders have. Are they sitting on profits that they need to take profits, or are they sitting on losses and just total net, going back to the earliest history of Bitcoin, the first transaction? So because of the nature of blockchain, you can see that. And what this is saying is right now that Bitcoin was at a level where it implies that there's a bit of euphoria, the start of euphoria, and then it sort of tapped the level of true euphoria and is pulled way back off of that. And now it's at a level, so it's this colored line. It's now at a level where it's about to become neutral. So if we see a little bit more chopping around, and I would say for a few weeks, days to weeks, if we see some more chopping around, then this will become in a very neutral position, where, and there's nothing saying this has to go negative. It's not like I'm saying there's going to be a full bear cycle, but it could go back to a more neutral position, such as what we saw back here still in the bear market, where it went back to a neutral position, kind of stayed there for a while before going to a bull market. And so I expect this to go back to a more neutral kind of net position. And then the same thing for Ethereum. It's showing that it's a little bit more overvalued still, just from this standpoint of this indicator. So it's just an indicator. It's just one indicator. It's not I wouldn't trade just on this, but it's saying that here, if we see more chopping around, people being, having to sell or selling because they can't handle the volatility, then this will work its way down and we'll get to a more neutral position, and that will then be a good basis for a rally from that point. And so this is just looking at the positions and net positions that people have. And the other one that's interesting to look at that a lot of people look at is what's called the MVRV ratio, market value to realized value ratio. And so realized value is, or realized capitalization is sort of the, it's an indication of what the net transaction, the value that's supported by transaction. So it's sort of like, you can think about like a kind of like a PE ratio for a cryptocurrency. And what this is saying is that it's at a bull market level right now for Ethereum. It's not at a undervalued level, but it's at a bull market value or level, but it's pulled way back off its high. So it's at levels like what we saw back in 2018, but it's nowhere near those peak values. And then if we look at the same thing for Bitcoin, then here we pulled way up those highs, which actually did get to those 2017, 2018 levels. So, but I think that, and I think that the case in terms of adoption is much more bullish than what it was in 2017, 2018. Right? For Ethereum in 2017, it was all about ICOs. People were buying Ethereum to then speculate on some, dumb ICO that they were going to put whatever supply chain for, socks or something on the Ethereum blockchain. And what for Bitcoin, it was just the idea of cryptocurrency in general. And people were talking about it every day on CNBC and so on. So so I think that it's now at a level where it's actually at a level that we saw even in the depth of a bear market here in 2019. So it's not at a nosebleed level, but it probably will take a little time to work this off. And so the way this could decline further without the price declining further is just more transaction volume. So more users and more people, more value moving around. And that could lower that and make it look a bit more bullish. So those are a couple things to look at. There's also this like network value that it's only available for Bitcoin, and this is actually back down to 2020 levels. So Bitcoin has had from its mid-April high at 65,000, this value has fallen by something like 60%. This network value to transactions signal. So the lower this is, the better. And so it's actually at a place where, and I think it was the one that here we go. Yeah, we could look at a stock to flow model too, but so this is like a stock to flow model is so it's a model that other people use, which is like the issuance of Bitcoin and how much is coming into the market versus being held on exchanges versus off. And so it's looking at sort of supply versus demand, and this is at quite a bullish level, a place where it's been a good buy. So, and I don't think this is available for Ethereum. So no. So those are some things, and that's a service called Glassnode that is really good for those kind of on-chain statistics. But I think what we've seen here is if we look at a shorter time frame, and so we'll look at Bitcoin first. That what we've seen is what I think is a very classic, potentially a classic bottoming pattern in crypto, where it's very rare to see like a V-shaped bottom, which is actually quite common in stocks and stock market. Typically, there are these kind of at least a double bottom and sometimes more, but double bottom is a very common pattern. So, so this is, I'm not saying that it's bottoming here, but if it can rally above, back to the 42,000 level or so, which is where it hasn't been able to stay since Wednesday, or actually since before that, since Monday, then that would be quite bullish. But I wouldn't expect it to rally straight back to 50,000. I think it's gonna spend some time bouncing around, just as we saw back in January or so. But then with Ethereum, it's a similar story. We had this kind of double bottoming, maybe bottoming action, and it's a little bit near support level that around 25, where if Ethereum can get back above that level, and then I would expect to see it over the next several weeks. If it does get above that level, ranging between that level and say 3,200, but not being able to break out above that. And I think that could do two things. It would work off some of the overbought condition that we were seeing in those other charts, get it back to a more and be a consolidation period, and actually bring a bit more bearish sentiment into the market that then actually provides a basis for the bull market to resume.
Right, and like we were saying before, there has been way too much exuberance in all of those, let's call them kindly, alternative coins, where the actual name starts with the S and H and ends with a T coins. But
right,
YouTube,
yeah,
we don't stand for cursing. So alternative coins have been just going crazy. We talked about Dogecoin, obviously, but there has been about 10,000 new coins created this year alone. And there is actually a market rate going right now, 10,000 per post, which influencers charge to promote those coins. So some people are spending 150,000, for example. Super Doge token said that on Bloomberg that he spent 150,000 over 20 days on various influencers to promote this coin. So it's kind of mind-boggling that he would come up and say that openly on TV, and like you said, it's completely unregulated. And it took him what, 25,000 to create a coin, 150 to promote, maybe another 25 to list it on some exchange. So after 200,000, he's going to have a coin that's very popular, and then he will cash out, and whoever is left holding the bag is going to lose all this money, because out of 10,000 new coins that have been created this year alone, I would be shocked if half of them are still standing 2 years later.
Oh yeah, and it costs very little. It doesn't even cost 25,000 to create a coin. You could do it for much less than that, for a few hundred maybe. The idea is, that there, like, for example, the idea of allowing people to do that was originally that, well, there could be like within a company or even like a family, like some kind of like reward token, like you do all your chores, pay you 23 Smith dollars or whatever, and then if you have like 15 of them, then we can go to the movies or go do whatever you want. And that was one of the examples that they used back in the early days, is something like where it was like a very like a fun little thing that wasn't intended to be speculative, where it was just a kind of script. but it could be managed online, or like company could have like reward points or something like that, for you could, just like, companies have, well, you do a good job on something and somebody can shoot you 20 reward points, and you can like get a windbreaker or something with a certain number of points and that type of thing. But there are also some very legitimate companies that are building projects and they're using that. But then because the barrier to entry is so low, there's there's a huge amount of bilge that's come along with that. And so one of the things that I think, obviously, my favorites are early Bitcoin, but then Ethereum, I think, has its own value, and then maybe a few others like Polkadot and Cardano. Cardano is a lot more speculative because they haven't actually done anything yet. There's a lot of promise and a lot of work there, but it's much more speculative, and it may be the most overvalued of any of the top 20. That's a legitimate coin. But then Polkadot is actually very close to bringing products to market and having some utility. But then there are all of these decentralized finance coins that they've just gotten killed. And if we go to a daily chart, and some of these are off at least 50% off their high still. And whereas Bitcoin, Ethereum, and so on have bounced, some of these are, have just crashed, and they've stayed crashed. But I would say that that besides the platform coins, that these might be, just as Coinbase might be a good investment at some point. It's worth watching. I would also suggest watching some of the key decentralized finance coins, like say Uniswap, Yearn Finance, which is sort of like a decentralized hedge fund that allows people to earn money on both Ethereum, stable coins, Bitcoin, and any number of tokens, synthetics, AAVE. So these are AAVE is the leading lending platform in decentralized finance right now, by far the largest loan book, and so these are potentially much more valuable in the future if they continue their growth that we've seen this year and last year. And so this sell-off is might be an opportunity, especially in ones like Uniswap that are down 18% right now. And they make money when there's a lot of trading volume, which is what we've seen. So these are ones to take a look at, and if we continue to trend down a little bit or sideways, then there might be a good buying opportunity coming up.
Right. Well, thank you, Andy, for all of the crypto ideas. It's certainly a lot of new companies that we all need to learn more about, because I'm certainly not familiar with most of them outside of Bitcoin and Ethereum. So it's good to learn the rest of them.
Right. And I would suggest, like the ones that I'm pointing out here, they're all, let's say, in the top 30 or 40 in market capitalization, although there's like some of these that you're mentioning that, they're, a $5 million coin and they skyrocket to something overnight. They're kind of the equivalent of penny stocks with all of the same scumminess.
Promoters.
Right. It's just totally, it's like the over-the-counter bulletin board market of crypto, where it's just there's a lot of scamminess going on, very, very shady, and I just stay with the bigger ones where there's a big community and you can learn about it, and you can they're very open about how their business is doing.
Exactly.
Mm-hmm.
All right. Well, thank you very much. Have a good weekend. and we'll see you back on Monday.